in this video, I'm just going to give you a little bit of commentary about my opinions on what's going on with the real estate market, specifically in the San Francisco Bay Area, but also just in general. Hope you enjoy. So March 2023. So what we've seen leading up to right now over the last, I would say about 9 to 12 months is one of the fastest and most aggressive rate increases done by the Federal Reserve in modern history. I think probably since the Federal Reserve was formed, they have never increased rates, the federal funds rate, this rapidly, this much. What that's obviously led to is a significant slowdown in our real estate market throughout the nation, specifically in our area. But at the same time, as you've seen by the videos that I've created where I go over the data, inventory levels have dropped significantly. So the number of new homes listed for sale have gone down significantly. So with these higher rates, for some reason, people are deciding to not sell their homes nearly at the rate that they were before. And my thinking of why this is because, well, rates are up. Before, people were thinking, well, I'm going to sell my home and move somewhere else, right? But now that rates are up, they're thinking, well, if I sell my home, prices are down. And then wherever I decide to buy, rates are up. So I'm getting less for my home and I'll have to pay more to buy another home. So I think that's significantly slowed down the number of homes that are getting listed for sale. So as of the date that I'm making this video, interest rates are hovering around that 5.75% mark, plus or minus a quarter, maybe a little bit more for, in our area, 30-year fixed jumbo loans. Rates have actually started dropping a little bit from a few weeks ago. If you recall, what's been happening in the last 3 to 4 weeks is Silicon Valley Bank failed. And that has started creating a potentially domino effect, although maybe a few banks, I think it's Signature Bank and maybe a few other ones have showed signs of failing. A few other banks like maybe First Republic and some other smaller community banks are showing signs of trouble as well. But so far it hasn't really led to any kind of major or big economic event yet. A lot of people are predicting that this is going to be a big catastrophic economic event and just the initial wave of things to come. So far that hasn't really happened significantly yet. So and we're not seeing that as of this time. So when that Silicon Valley Bank failure happened, the Fed started pumping their brakes on the interest rate increases. And I think they only increased interest rates by 1/4 of a point. And that in turn led mortgage rates to decline a little bit because now with concerns about the Fed increasing rates so rapidly, causing potential bank failures and other issues in the economy, it seems that Jerome Powell and the Fed have decided, let's slow down a little bit on this and see what happens. So right now, obviously, just like every month, I believe it's every month, people are impatiently waiting for the Fed to release what they're going to do next. That's where interest rates are at. And obviously interest rates have a very significant impact on the local real estate market and the real estate market in the nation. That leads me to my next point is that new listings hitting the market and the number of active listings for sale hit an all-time low this last month for the country, and I believe the San Francisco Bay Area as well. I think the data only goes back maybe 20, 25 years for the San Francisco Bay Area where I can find it. So I don't know if that's the lowest in history, but it probably is, judging by national averages. So with that being said, higher interest rates have led to much lower inventory. And here's a little blurb that I picked up from the Housing Wire. So the NAR data going back decades shows how difficult it's been to get back to anything normal on the active listing side. In 2007, when sales were down big, total active listings peaked at over 4 million. Today, even though sales are trending at 2007 levels, we are at 980,000 total active listings per the last existing home sales. We are getting the next existing home sales report this week. Just remember this, inventory data is considerably lagging and also includes homes that are pending. So yes, overall, the consensus is inventory is down, new listings hitting the market is down significantly. Now that's a huge difference from the housing market crash in 2007, where inventory was super high levels. So that now leads me to what am I seeing as a realtor here in the San Francisco Bay Area, specifically in San Mateo County, and San Francisco County is where I do the majority of my business, but also to a lesser extent the other Bay Area counties as well. Yes, the number of homes for sale is low. And our buyer clients, what I'm seeing with my buyer clients is because there's such a low number of homes available for sale, average sales prices have decreased year over year for single family home sales and condo sales in San Francisco, but interestingly enough, the average and median sales prices for condos and townhomes in San Mateo County is actually up year over year. Prices are down and interest rates have remained kind of steady over these last few weeks or so. And so a lot of our buyer clients that have motivation to buy a place really want to get into a home, but there's just nothing available for sale. It's just very low, the number of homes available for sale and the number that are hitting the market. So I, as a realtor, and we on our team, we have to get more creative. So we have been able to get a few buyers into homes, but we've had to find off-market properties through networking with agents, through internal real estate portals like Top Agent Network, sending letters to homeowners in neighborhoods that our clients are interested in. We as agents have to get a lot more creative to get our clients into homes. And we have been successful, but it is much harder than it has been. Even when we were seeing multiple offers and everything was selling hundreds of thousands over asking, which is still happening, by the way, we are having a tough time just finding homes for our clients that they would be interested in making an offer on and living in. And that leads me to my next point. Listings that are hitting the market, we are still seeing 50 plus disclosure packages requested, 10 plus offers being written on homes, and homes selling for 20 and even sometimes 30% or more over the asking price. We're still seeing this crazy activity on the market, this multiple offer situation, all this craziness. We're still seeing it all the time, especially because inventory is so low and the people who are in the market are motivated to buy because interest rates are up. And overall, single family homes are much, much hotter than condos or townhomes. We're seeing a lot more activity on single family homes than we are townhomes, and condos are even slower than that and taking a lot longer to sell and are maybe only getting one offer or two offers or something like that, whereas single family homes, I'm seeing regularly 10 plus offers. Lastly, we had the California Dream for All program come out, which was basically an equity share down payment assistance program for home buyers that are capped at a certain income limit. And it seemed to be a pretty great program. It came out, I think they unleashed $300 million in funding. Well, that program came and went in about a week and a half. From the start date until it was depleted of funds, it was about a week and a half. It was an incredibly anticipated launch. We made multiple videos about it. I posted on my stories regularly. I kept trying to motivate people to do this because it was able to give people a purchasing power from about $1 million to maybe $1.2 million, for instance. And that's a huge difference between maybe a 2-bedroom fixer single family home to a 3-bedroom, 2-bath kind of okay condition home in the same areas. Ultimately, that program went very, very quickly, and I anticipate that there will be more programs, more money to deploy by the state of California. It seems that they're committed to helping people afford homes in this area. So we are seeing more and more programs like this in recent years. And I think we will see more from the state, from local municipalities. So if you were interested in buying a home and then this program came and went, I recommend getting prepared, being ready, going to tour open houses regularly, reviewing disclosure packages with your realtor, reviewing comparable sales, being in the market, staying pre-approved, and ready in case a program like this comes out again in the coming months or years. What are your thoughts? Tell me a little bit in the comment section below what you think, why you think the market is behaving the way that it is, or what you think that the Fed is going to do next. Please let us know. I love your feedback. Thank you so much. Wherever you're watching this video, please don't forget to subscribe, follow us, share, comment, like, all that good stuff. Please help out our channel by engaging with the channel. You help it grow, you help more people discover our videos, and it really helps me out. Thank you so much.